Hello, all, and welcome back to another lecture in our series Elements of Corporate KYC. And this will be kind of the last lecture of the KYC elements. So stay tuned. So far, we have covered many topics related to KYC. So today, we are going to see the remaining topics. So these are the elements of corporate KYC that we were talking about. So we have covered the identification and verification, understanding of customer profile. These are the two main areas. Then we have also covered the beneficial ownership. Now we are going to see identification of associated parties, screening, risk assessment, documentation, and ongoing monitoring. So let's get started. So I'll just skip to those. So we covered all of this, the beneficial ownership, source of funds, source of wealth, what are these? Then, so we are going to start with identification of associated parties. Now, from the previous lectures, we have seen that during a corporate KYC, we ascertain who we are dealing with. So in this phase, identification of associated parties, we try and go ahead and understand about the nature of ownership. So for example, say uh, it a sole proprietorship that's only a natural person is owning it, or say two people coming together and own two natural person coming and owning the entity, or say is it a legal person that is owning another entity. Then there are complex structures like trust, corporations where multi-level of ownership is involved. So in this phase, we try to drill down what actually is the ownership uh, involved and who are the associated parties. Now, in this phase, one of the things that we also look into it is, say for example, there is a party A and the party A is a manufacturer. For example, this is just an example. So party A is a manufacturer and party A comes and wants to get onboarded with your financial institution. Now, if what you will do is you are doing the KYC of party A and you have done it properly. Now, in this phase, we also will see who are associated with party A. For example, who are their suppliers, from where they are getting their raw materials, like is there any third party that is involved with them and what is the third party that is directly involved with them, what are their credentials, like are they trusted, are they not trusted. So for example, let's say you are a manufacturer making gold ornaments. Now you are clean, but the gold that is being supplied to you, say it's from terrorist activities or say from smuggling. So in that case, you are onboarding such a party who is involved with certain degrees of crime. So that's why we try to ascertain who are the parties that are involved directly or indirectly with the party that is being onboarded. So these is seen in this phase. Second point is we also look at key individuals or principals involved. Let's say uh, people or members appointed to govern or take actions. So examples would be like board of directors, the CEO, the CFO, the chairman, the treasurers, the lawyers, say involved in this. So these are also associated parties. Whenever there is a huge corporate deal or whenever there is a corporate structure or whenever there is a legal structure, there is always a law firm or lawyer involved. So we will go ahead and check those parties also. We will take into consideration all those associated parties with our party. So in this stage, we will go ahead and do the same checks, like we will go ahead with the full name, date of birth, then country of residence. Say we'll try to get letter from the company, the like where they have signed and told that these are our directors, say these are our representatives. So these kind of things we will go ahead and see. And also, again, we will drill down to beneficial ownership. Like who is the ultimate beneficial owner who will be reaping profits out of that venture or that organization or whatever the purpose with which the corporate has been established. So in this identification phase, the main crux is we will go ahead and identify any associated parties with our parties. Next comes the phase of screening. So screening is one of the most important elements during a KYC. So till now we have gone ahead and identified like the who they are basically, name, what who they are. Now we will verify that these people that they have claimed to be, are they genuine? So in screening, what we do is we check basically these entities or these people or whatever information we have got or the client across various database or across various data points. So few examples of database or data points that generally are used during screening are the Financial Action Task Force list, the gray and black list. Then there is OFAC sanctions list, then PEP list. Then there are multiple lists that are available where we go ahead and check whether these fall under this or not. Then there is also adverse media screening. So what does mean is that if that client is involved in any of the negative news or media, then we go ahead and screen them also. Like what was, why they were coming up in the media, what was that they did negatively or did something bad for which it was there. So this is called adverse media screening, where we check those, the client with news, whether any negative news has come or not. Also, there are multiple financial organizations in the world. These financial organizations have been into play for quite a long time. So every organization have identified certain parties or certain clients with which they do not want to continue their relationship. Hence, these organizations go ahead and maintain their internal database also. We screen with all the international lists available or the generally used list. Also, we go ahead and cross-reference it with the internal database that is available. Now, there are many third-party softwares for which license is required. The banks takes license, and these software help us do this screening. So there is a very common term in the screening during screening that is called NLS, that is name list screening. So here we do the checking, or here we cross-reference the names of these entities with this list, the names provided in the list. So let's say, for example, we have say a famous cricketer. Say let's Virat take example of Virat Kohli. So Virat Kohli is a famous cricketer, but it's not necessary that Virat Kohli is the only Virat Kohli in India. There might be so many people named Virat Kohli. So if a person comes and tries to open with your a bank, so if he says that he is Virat Kohli, so is it that cricketer or is it someone else? So we'll go ahead and go do with the name list screening, that who is that person. So we'll take the data and feed it there, and the software will give us the results with that name. So this is kind of screening what we do. So this is the screening phase in which we go ahead and see the client or the entity with the list that are present. Again, uh, during screening, since a institution, financial institution, onboarding is done continuously, and sometimes there are tons and thousands of screenings to be done of clients. So manual screening might not be possible. Hence, sometimes or majority of the times it is batch screening. Let's say entire batch is uploaded into the software, and given time the software will run and then give you the results. So this is kind of a batch screening where uh, many entities are clubbed together, made into a batch and run for screening. Also, there is point or manual screening. Say this is done when it is like evident that you need to do it manually. Say there are very close matches, like say you know that person or it's a very close match, then manual intervention is needed and manual screening is done. So these are the two types of screening basically done, the batch screening and the point or manual screening. Now, during screening, generally, it's not necessary every time, but generally, and depending on the organization, the results are as follows. There is a clean or false positive. The nomenclature might be different in different organizations, but it is a clean or false positive. This means that during screening we did not find any kind of issues with that client or that entity, so it came out clean. Now there is the second phase, which is known as the true positive. So true positive is like, yes, that is present in those lists, or that is there in the list. It has matched. That is the true positive. Also, there is one more category, that is the potential hit. So you might be shocked, but majority of the times when any kind of screening or alert generation in transaction monitoring, anything this kind of is triggered, majority of the times the result comes out to be potential hit. This is where you need to analyze and trust your logic, do those in-depth investigations, and then come up with an answer whether this is the true one or it is a clean one. So here you need to classify basically. And these results, based on these results, the further action is taken, like say to forward to the compliance department, or to close off the alert, or say let it go. So based on these kind of results, every institution takes action. Now, risk assessment phase. So till now we have seen that we have done screening, we have identified the beneficial owner, we have identified the associated parties, we have collected documents, we have done everything, and now we know who that customer is, or who the client is, what is their nature of business, like what is the declared income, what is the source of wealth, source of fund, everything we know. Now, based on this, the organization, financial organization, will go ahead and classify these entities or these clients into few categories. So this is known as the risk assessment phase, in which the classification is done. Now, based on certain factors, like these are the most common seen classification factors, that is the entity type, the country or jurisdiction, then the product and the industry. Based on these kind of things, scores are given, and the client or the entity is classified into low, medium, or high risk. So let me tell you, the product risk is based on two things, internal product as well as external product. So what does this mean is, like, if say client A, client ABC is into say trading, for example, okay, and what the client trades is, say they go ahead and trade in firearms. So from outside of the organization perspective, this arms trade can be considered as very high risk or high risk. So from external point of view and the product that they are involved in, guns, for example, say they sell guns, revolvers and handguns. So they are classified into high risk. Again, internally for the organization, say for example, they have come ahead and they are existing customers and they have taken up, say, a credit card from your organization whose monthly limit is, say, 50,000, for example. And you have seen that every month they have gone ahead and used the maximum possible, that is 50,000. So in this case, they have not broken any rules or regulations or laws. They have used whatever you have given. The product that you have given them is a credit card, but they are using it to the maximum every month. So you might be curious why always in a month it is going to 50,000. Why not 48,000? Why not 40,000? Why not 30,000? Why always 50,000? So based on that, you will also kind of ascertain a risk score to them. So this is how this low, medium, and high risk is derived based on these factors, and organizations will put them in these categories. Now, why this is important? Risk assessment. Risk assessment is important due to further investigations, documentations, and ongoing monitoring phase. So let's say if you classify a client into high risk, the documentation is different. You need to attach certain documents along with the customer package. Then if you classify them into high risk, there is the monitoring cycle changes, the monitoring phase changes, the number of reviews changes, the period changes, so everything changes. And you know that you need to monitor them closely so that nothing negative comes out of it. Then there is the second is the low risk and the medium risk. For again, these parameters are there, but the frequency changes. Now the last phase is kind of the documentation and ongoing monitoring. So documentation is the crucial part in a investigation. So generally what happens is PDFs need to be generated. Whenever you are doing screening, whenever doing all these things, you will prepare a customer packet in which you will provide all this data, you will keep all this data so that tomorrow if it is required, you can retrieve it. So the main part of documentation is properly storing that data so that you can retrieve it whenever needed. So generally PDF is attached and a proper paper trail along with all the customer details is captured and it is saved properly or filed properly with a proper naming convention. For example, there is a client XYZ Limited, and let's say there is another client XY Limited. Now, if you have done all your due diligence and investigation on XYZ Limited, you had made the paper trail, you had made everything, but the folder or say the paper file where you have stored, you have named it at XY Limited. So if there is a requirement to retrieve that file whenever audit is there or whenever any for any other necessity, when you are going ahead and searching for XYZ, but you have named it as XY, you will never find XYZ's details. You will you will be there, regulators will come up and say that where is this detail, you won't be able to, then there is a fine. So naming convention is of the utmost priority during investigation. Now the next phase comes is the ongoing monitoring, or sometimes it is also told as periodic review. So here, based on the risk appetite that we have given to the risk scores and risk classifications that we have given to our clients, we will go ahead and do a periodic review. Let's say there are two types of basically things we do. One is the financial transactions, one is non-financial transactions happens. So let's say financial transactions are related to transfer of goods and money, and non-financial are those where this transfer directly does not happen. So let's say there is a high risk customer and you have seen that they are frequently going ahead and changing their address. So this is a red flag or a trigger point that he is already high risk and he is frequently changing his address proof. Now, this is where we will go ahead and review those customers again. And the time limit for periodic review is different based on different jurisdiction. So here again, we will go ahead and keep on continuously monitoring these clients that are onboarded, the new clients that have been onboarded, or the clients that are already with us. So this is done in this phase. So summing up our whole lecture, we have seen the identification and verification phase where we have tried to identify the client. We have gone ahead and taken the documents which are necessary to identify. Then we have verified those documents from government websites or trusted data sources. Then we have understood the customer profile, like what business he is running, what is his source of wealth, source of fund, all those things we have captured. Then we have seen that we have identified the associated parties, like whether there is a third party involved, if the third party has given contract to any fourth parties. So all these kind of relationships are identified and beneficial ownership structure is drilled down. Ultimate, who is the ultimate beneficial owner? All those things we have seen here. Then we screen all those things in the screening phase with the database that is available, and then we go ahead and see if there are any matches, like say there are, if there is any true hit, or say there is false positive, or say potential hit. So we see these things. Based on all these things, the organization goes ahead and do the risk assessment of the client and places them into the three categories, that is the low risk, medium risk, and high risk categories. Based on these risk categories, we will be going ahead with documentation. And the most important thing in documentation is including everything related in the investigation in a proper location with a proper name convention. After the documentation phase is over, we will definitely go ahead with the ongoing monitoring, where reviews are done on the clients existing with us or any new clients that have been onboarded with us. We will go ahead and you can monitor them based on the guidelines set by the international as well as local as well as the organizational policies. So this is what elements of corporate KYC are. So stay tuned. We will be covering more related to anti-money laundering and KYC. But for this lecture, Elements of Corporate KYC, this is where I end up. And thank you once again for all your love and support. Please keep subscribing. We have reached a great deal of watch time subscribers. So please keep spreading your love. Thank you so much. Bye bye.